Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Get your free copy of A Guide to Passively Investing in Commercial Real Estate. Inside, you'll learn the basics of passive income and real estate syndication, what kind of returns you can expect, how to find a sponsor, and how to evaluate the risks. Download your copy in the show notes or visit lifebridgecapital.com/invest better to start your investment journey. I'm Whitney, host of the Real Estate Syndication Show. Every day, I'm interviewing experts that will help you to successfully invest in or grow your syndication business. Hit the like and subscribe button so you'll be on track to learn from the best in the industry. This is your daily Real Estate Syndication Show. I'm your host, Whitney Sewell. Today, our guest is Veena Jetti. Veena is a founding partner of Vive Funds, a unique commercial real estate firm that specializes in creating conservative opportunities for investors. Veena brings a dynamic perspective to targeting, acquiring, managing, and operating assets using best practices combined with cutting-edge technologies. Her professional expertise includes driving corporate strategy and business development opportunities. So Veena and I today get into a few different things about her current business and how she's investing right now, even why they've shifted asset classes and just some details there. I think that's beneficial to you right now in this current market. And if whether you're passive or you're active investor, you're going to enjoy that part of the show. But also, we go into how she's been so successful at raising money as well. Just some different things that she does around raising money. They've been very successful at it, closed some very large deals lately. It's very impressive to see how fast they've grown. And so I know you are going to learn a lot and enjoy the show today. Veena, welcome to the show. It's an honor to catch up again. I've enjoyed the last few minutes. It seems like it's been so long. You and I have been working hard in this industry the last few years. And before anything else, I just want to say congratulations to your success. It's definitely happening and doesn't happen without a ton of work, to say the least. So looking forward to hearing a little about that. But tell the listeners a little more about maybe your business model right now at a high level, and we'll dive into that, but then how you got there as well.
Absolutely. Thank you so much for having me. You've done so many episodes. It's really amazing because creating content is like the bane of my existence. So very impressed here. Yeah. And it's been forever. So in recent years, I actually have rolled out Vive Funds, which is a value-add multifamily owner-operator. We acquire assets in Texas, Florida, and Georgia. We have built a significant portfolio in the last 12 months in Atlanta, actually, which that was not by design, that it was all supposed to be Atlanta based. I'm looking to get maybe one more done before the end of the year or early Q1. And we've kind of shifted our focus a little bit from those, B assets to maybe more B plus in A location assets. So slightly different investment profile. But I think that for this point in the market cycle, it really works for our model and our investor base. So I'm really excited to be here. Thanks for having me.
Yeah, my pleasure. And you just mentioned a piece of a topic I wanted to highlight because you and I talked about it a little bit. But you said you shifted asset classes or the vintage anyway. Could you just elaborate a little bit, maybe what your thoughts are behind that, maybe why you're choosing to do that right now?
Yeah, so I think that we are more toward the top of a market cycle. I don't think that we're in a bubble. I know a lot of people that are not in real estate think this is some kind of bubble that's going to burst like it did back 07, 08. I don't think that we're in that same bubble environment. Really, what I think this is just supply and demand issues, just economics, where there's not enough supply to catch up with the amount of demand that we're seeing, especially in our markets. And so previously, we would have invested into like 1980s vintage. Now we're focusing a little bit on newer assets that are a little bit nicer. They maybe have a more solid tenant base. So it's not so much workforce housing. During COVID, we saw a lot of tenants that couldn't really maintain their rent payments when they missed a week or 2 weeks of work from a quarantine. And so we've really shifted to assets that have a tenant base that are more work from home or have more solid jobs so that they can continue to pay rent even in the event of something like COVID happening. And so the other thing we've actually shifted toward is more spacious and amenity place. So we're looking for assets with really great amenities now. Everybody's at home and they're home with their kids, and apartments are small. So we're seeing a lot more demand for more open spaces. We're seeing more demand for nicer amenities, work from home spaces throughout the asset. So those are things we've started to kind of shift our focus toward, because it serves our resident base. And the one thing that you and I both know is we need to know who our residents are, and we need to be able to cater to them. So that's really what we look to do when we're acquiring an asset now.
No, that's awesome. Would you say that that's more Class A properties now that are going to have more open spaces, greater amenities, or do you see even some B class or older projects that are able to compete with those types of amenities?
Yeah, so I think we are seeing definitely Class A being built with that in mind. The big difference between Class A and what we're going after, we're kind of in that B+, B++ space. And I say that because we're not going after that 2019, 2020, 2021 vintage. We're going after the assets that still need interior renovation, that are ready for value add. So maybe early 2000s, 2011, 2012, those are kind of the assets that we're focusing on, 1990s vintage. And so those assets, we're seeing a lot of opportunity to go in and start renovating and changing what we're seeing there and adding certain amenities that were just not planned because they didn't exist at the time. For example, package lockers, right? That's a huge amenity that a lot of our tenants really want in their assets. And so in 1990, Amazon wasn't a thing. No one got packages delivered like that. So there was no need for it. But now we're going in and we're reimagining spaces that are already existing to add those in. But we're looking for that focus on amenities or possible amenities in our assets.
Are there any other amenities that maybe we wouldn't think of that you all are using now?
So interestingly enough, last year in 2020, we had acquired an asset in Marietta, Georgia, and it was 494 units. So it was a big asset, but it had an entire soccer field in the back, which I've never seen an asset with that much empty space, but it actually got used a lot. And it didn't actually get used as a soccer field. It got used as a walking trail around the back of it. And so I thought that was a really nice value add, especially during COVID. We acquired it when there was no vaccine on the horizon. We didn't really know how long we were going to be in the pandemic, and our outdoor amenities got utilized a lot. There also was an outdoor gym there, which got a lot of use as well. And it was kind of one of those sports court type gyms. And then dog parks get used a lot in our assets because our residents tend to have animals or dogs that they want to be walking. They don't want to get in a car and go somewhere because now everyone's used to being at home all the time, but they want to get out of the house. So they're going to the dog park. So we're seeing a lot of use on those too.
Yeah. And so you all put in a walking track on that property?
We didn't. So it actually had a walking trail.
Oh, okay.
It got way more use than I actually thought it would. And so we're actually focusing a lot now in 2021 and in the future, we're focusing a lot on revamping gym spaces as well, because now everybody's starting to reutilize gyms. We want to make sure they're kind of up to date. And when you have those 1990s, early 2000s vintage, they're just a little bit outdated compared to what we have today, right? A lot of the bar, yoga, Pilates, a lot of that is way more used. CrossFit is way more used today than, I don't even know if it was around back then. So
yeah. Well, I want to shift gears a little bit, and I wanted to hit that because I know that's important. A lot of people are thinking about that right now too. Just everybody's concerns about the market or what's going to happen, all those things. So it's interesting just to hear thought process behind the types of assets you're looking at and why. But your ability to raise capital has grown significantly, and that is a place I know you thrive, right, and have done very well. And so I'd love to talk through that a little bit because I know there's many people that are listening that, they're trying to do that, right? They're trying to do the same thing you and I have done, but ultimately be able to raise money like you can, have those relationships with investors and provide that value to them. So I would love to talk through that a little bit with you and maybe your strategy, and how you're doing that now and some just techniques behind being able to raise money. Sure.
So one is, I really wish I had spent a lot more time setting up systems and processes that and I think this is true of a lot of entrepreneurs, right? You're in the thick of it. You are learning new things as you go about how to do things better, and you don't document it. So I didn't have like SOPs available when I wanted to tweak the process. I couldn't look back and say, okay, if we do this a day earlier, we could do this a day later and tweak that process. Now we do that. So I chart everything onto a calendar. I can see exactly where we are in terms of our capital raise. I can see which of my investors who normally write me checks have not even opened emails. So I have a lot of the tracking data available. And now we have those systems and processes in place.
What do you use to track that? How do you see all that and kind of track all that?
Whitney, we're very fancy. We use Excel.
Okay. Well, that's a fancy software there.
I know not everybody has access to it, but no, we've tried a lot of different softwares and processes. And honestly, sometimes if it's not broke, don't fix it. And Excel seems to be the one that manages to do exactly what we need to do internally. And we utilize it on system like Dropbox or Google Drive, where we can share it amongst the people that need to be able to see it. So for example, our CPA, he can log in and see who's wired, what dates, stuff like that. So it's just a nice central database, but we use Excel. And then I think another thing that I wish I would have had is, I wish I would have hired an admin way before I actually did. Oh my gosh. The idea of onboarding someone and having to train them was so overwhelming that I kept putting it off and I kept putting it off and I kept putting it off. And then finally I was like, I just don't have any more time. And it has been life-changing. And I think also part of it is because I just have a really great support staff. So I've just gotten really lucky with who we've hired. But if you can find someone who can help, it is a game changer, because there's certain things I don't need to necessarily answer or do, right? Like I don't need to upload things to MailChimp. I just need to review them and then decide if they can go out or not, or if they need to be tweaked. But before, I was always wanting to control every aspect of my business, that I was doing it myself. And it's just not scalable and it's not practical as you grow.
For sure. Yeah. More systems, processes, and I'm going to get to the admin in just a minute, but the systems and processes, do you have a way that you document those things now? Or is it like just a Google Doc, or, a way that you can go back and edit it and improve it, things like that?
Yeah. So we actually, again, fancy software we just use Microsoft Word, and we put everything out in steps, but we use, do you know what Loom is? Have you heard of Loom?
Yes.
Okay. So we use Loom. So anytime we're doing something new, we go in, we record ourselves doing it, less than 5-minute video, and then we pop it into the document so that if I'm handing this to somebody new, they can go through, they can read it, they can watch the video, and then they can replicate the process. And it saves a lot of time, especially when you have like a staff member out on vacation or maternity leave or whatever. You can seamlessly transfer that over to somebody else with minimal disruption, some disruption, but minimal.
Yeah. And a quote that I've read many years ago that stuck with me is, you take the time it takes less time. Right. And you're doing that right there. Right. And in the moment, it seems like, I don't have time to do that. But, over the next couple of years, it's going to save you a ton of time. But to the admin person, I could not agree more. Faster you hire somebody, the better. Are they going to leave? Probably, but you're going to learn a lot in the process and, probably hire better the next time. But I wanted to ask you, how did you find this person? What did they do for you at first?
I actually found them one of those websites you just put out an ad and then people can apply in. And I interviewed with her, and she actually had no real estate background, but that actually is something that I've found in hiring, is that you don't need an admin that has real estate experience, because it's really the soft skill set that you're looking for. The technical stuff, I can train somebody on what our processes and systems are. I need somebody who wants to be there, who is a hard worker, who is sharp, who can understand problems, and who can problem solve without me having to hold their hand. So really what I hired for was more of a project manager. And I actually had hired someone temporarily before that who was also a great fit, that came from Disney, and she had no experience in real estate whatsoever, but she was a project manager at Disney. And it was a really great fit because she understood the nuance of having a company that moves as quickly as we do and having to manage those tasks and projects. So I interviewed her. She seemed like a great fit, and it was very, very, very scary because she was like, okay, give me all of your passwords. And I was like, what? You want like all of my passwords? Like, you're just going to go into my email? Like, is that? She's like, well, I can't organize your email unless I have access to your email. And I was like, okay, you have a fair point, but what this is like, this feels so vulnerable. And, and within 2 weeks, I was like, okay, here's my social security. Here's my mom's maiden name. Here's my sample of my blood type, like everything, because it was just life-changing. But it was nerve-wracking. I don't know if you had that same experience when you first had your admin.
For sure. No doubt about it. I think you have to be, somebody asked me that I was presenting last week at some mastermind, and there somebody said, well, do you give them access to your email and your Facebook account? And I'm like, if you want like more of your life back, you have to do that. Yes. you have to put processes in place and hand that over,
Yep.
So no, that's awesome. No doubt about it. Systems, processes, you have to hire somebody, some admin, get yourself some help. What's something else? Or I guess even more like lead generation, on the lead generation side, what have you learned now that you wish you'd been doing then?
The one thing that has happened, and it actually kind of happened organically more than anything else, is I get a lot of referrals from our investors that invest with us already. But the KPI that I track the most is not how many leads I have or how many new investors I have. I actually track the KPI of how many investors are in 2 or more projects with me. Because to me, that's more important, because that means that they're happy and they're coming back. So at any given time, I'm around 80% of my investors are in multiple projects with me. And that, to me, I want it as high as possible. Now, the interesting thing that's happened is since starting, we just don't have that much room in our projects. They fund so quickly. And I'm sure you have that too, once you've been doing it long enough. And so what ends up happening is the 80% or 10% of them are just investors that can't get into another project because there is no other project to get into yet. But I suspect that that'll continue to go up as we continue acquiring more and more assets. But that number is really the KPI that I look for, because it tells me they liked what they had the first time enough to come back and reinvest with us again.
On referrals, do you ask for that in some way? I've seen it done different ways, and I just wondered, like, how do you kind of promote, hey, we'd love for you to tell other people about us, right?
I don't. I want to, and I would, but the challenge I have is, so the way we send out our offerings is we do it in kind of a 3-tiered system, if you will. So the first offering and first, bite of the apple, if you will, goes to current and previous investors. So if you've ever invested with us before, you get priority into our deals. The problem is as our deal base grows, that number becomes more and more, and it's harder for me to get out of that first round and still have any of the offering available. But the second round goes to what I call like our VIP list. So that's any referrals of friends and family or current investors. So it's like really closer connections. But if you, like, let's say your brother wants to invest and you're already invested, so that person would get onto the VIP list, or like kind of that like second round, which usually I have a few investors that come in there, and that's where my new investors usually come from. And then if there's anything left, which there almost never is it goes to kind of my general database of investors that I'm just meeting, or someone who's Googled us or heard us on, a podcast or something like that. So in doing that, I haven't actually asked specifically for referrals. It just has happened more organically, but I do put them onto that VIP list so they get a little bit of an earlier look than the general database.
How much time there do you give the first list versus the second?
So it depends, because sometimes we fund a lot faster than I anticipate funding, and sometimes it takes a lot longer. So for example, in 2020, when we were funding, I thought maybe nobody would write a check because it was the middle of COVID and we were all kind of like, what's going to happen? So I thought it was going to take us a long time. It took us about 4 weeks. That was a $26 million raise. Now in 2021, we've put out a few different $29 million raises that have funded in less than 2 weeks. So kind of depends. Sometimes I don't even get out of the first or barely out of the second one before I have to do anything. But I'd say about within 2 weeks, everybody gets the deal at some point or another.
Yeah, no, that's interesting. I've heard of different people doing that. Like, if you're a returning investor, you get to see it for the next one first. We've thought about doing that. We've not, but we've thought about doing that, something like that as well. But what about that? I get this question from clients and from other people often. It's like, well, what about that wait list? How do you handle them?
Yes, the wait list. So what we do is we put everybody in. So I tell investors, if you're interested in the deal, even if you're not 100% sure yet, go ahead and put in a soft commitment. because it timestamps you in. And then what we do is we just go down the wait list and we offer it to the next investor on the list in order, with preference going to current and previous investors. But we don't get to accommodate very many people off of our wait list. I do try to give anybody who's on our wait list from a previous deal, I try to give them a little bit of a heads up, like, hey, you might want to check your email like all this week because you'll probably see a deal from me, so that they can get off the wait list. I have a lot of investors that will approach me after we send out, hey, we're completely closed and you're on a wait list. They're like, oh, but can I get in? And I'm like, no.
It doesn't work that way.
Yeah, I would love to take your money, but I cannot. So it's just, we go to wait list, we go down in timestamp, and that's just how we handle it.
Yeah. Well, let's talk about that emails there a little bit. You said like you might send something out, say you're going to put an offering out on Friday. You might send something out earlier in the week or the week before saying, hey, look out for this deal. Or how do you handle that communication a little bit?
In my head, yes, that's how we do handle it. But in reality, we definitely don't do that. So usually it's just, hey, here's the offering with the OM and the self-commitment form. Go ahead and fund. We also will host a conference call within that first week to answer any investor questions. But generally speaking, we do not give them a heads up. Like usually it'll just be like a side text or something. If someone's on a wait list that has been on a wait list, especially multiple times, I'll tell them and be like, listen, you have to move faster. You cannot wait to move forward. So that's generally how we release our deals.
Okay. Any follow-ups after, or you said they're going to, and we've run into this too. It's like they fund really fast. And so there's almost not a need to like send more emails out, typically, but anything around your follow-up emails or anything after that first initial send out?
Yeah, I do send out multiple emails because I do send out updates as the due diligence continues. So when we find out new information, we do send that out. If there's a change in the market, we'll send that out. And I do it not necessarily because they're going to be able to get into this deal, but because I want them to understand how we think about and look at deals for the future deals that they see. So I do send out follow-up emails and I do send out updates to the investor database if I have time. So meaning if I don't fund before I can send another email, I'll send out an email saying, hey, we're 60% full, 80% full. But generally what happens is by the time we're awarded a deal, so for example, we were awarded a deal on Friday, by Monday, I probably am about 50% committed at that point, just from, the few phone calls, family offices. They take down large chunks of these raises. And I think that investors that write, $50,000 or $100,000 checks maybe don't anticipate the demand from family office, especially today, for those hard assets.
Yeah. I didn't realize you were working with some family offices as well. So no doubt one of them come in and take the rest of it. Right.
And then we invest pretty heavily into our own deals. So, between our investment and then the family offices, that takes down a significant portion of the deal.
Yeah. You mentioned too, like sending out the OM or the investment summary, operating memorandum. Tell me a little bit about your process of creating that.
Yeah. So it's painstaking, but I feel like we now have kind of a good groove going on. We've actually tested a few different OMs, and what we found is more. Investors seem to really like to read all of the nitty-gritty details. I'm not convinced they actually read all of it, but every time I put out a more detailed OM, we get a lot of feedback saying, oh my gosh, this was great. There's so much information. In our conference call, I don't go through the OM pretty much at all on our conference call because they're accredited investors. They can read. They don't need me to read them in OM, right? So what our conference call does is it serves as kind of those nuances that you can't really put into writing. You can't put it into print. It needs to be communicated in a verbal way. And so that's really what we utilize our conference call for. But process is pretty standard. We have, our normal pitch deck. We revamp it, change out pictures, change out all the information. And then some of it stays the same for the most part. We might play with the layout a little bit and then branding, et cetera. It's pretty straightforward. And our admin team handles that pretty flawless.
Is that in-house or like your admin team in-house will create that for you?
Yes, I know. And it's weird because I didn't realize that people outsourced it as much as they do. But I think having the control, this is something I can't let go of completely yet. So maybe one day, ask me again in like a year.
Yeah, no, for sure. We've done it both ways. We've hired it out or found companies to help, where we give them the information and part of the design even, and they kind of go make it look nice. And we've done it in-house both. And I don't know, I've gone back and forth about it a little bit. Usually even if I have it done out, if I outsource it, I want them to give it to me in an editable manner, right? Because there's always something you found that you need to change last minute, or something like that. But
capital stack changes and now you need to go in and update. I know, I totally get that. So did your investors give you feedback on or do they not know the difference? Do they look the same?
Or as far as what?
Whether it's in-house or not.
I don't think so. We use some of the same templates, that we've had in the past. And so I don't know that they would know it. Sometimes though, like I'm not extremely skilled in PowerPoint or whatever. And they've used different platforms at times too, to create it. And so it's just faster sometimes for me to hand them all the information and say, make it look like this and go, And so sometimes that's faster than me trying to do it. But what's your biggest source for finding new investors right now besides referrals?
Honestly, it's my current investors. They're the ones that are funding the vast majority of our deals. Also, we're seeing a lot of family offices seeking us out at this point, especially now there's a really big focus on women in this space. And so I think that it's just our assets because of the size that we're acquiring at, they're getting a lot more attention. We have people who work on the transaction itself that are investing into the deal. So like sometimes our lenders will invest with us, which I didn't expect our lender to invest with us, but they see the deal and say now they love it. And so we're just seeing all different sources coming to us. But really it's my current investors that are increasing their investments as time goes on.
Yeah, no, that's awesome. And I wanted you to speak to getting where you mentioned like family offices are seeking you all out now. There's probably listeners that are thinking, well, how do you make that happen, right? How do you get to where family offices are seeking you out? I can just hear some listeners probably asking that question.
Yeah. So family offices operate in a very different way than the average investor, right? Like even than we operate because they have gatekeepers and their whole entire job is to keep out every single investment and say no to everything pretty much. So what happens is when they start seeking you out, they've already done their initial vetting. So they've already looked at who you are, your track record. They've looked at your background, the assets that you're currently operating, how those are doing, your strategy. So I actually have an investor brochure or like a company memorandum, if you want to call it that, that I send anytime someone inquires about what we do. I actually have that, which I send to them, which is completely laid out. I've had institutional funds approach us to write, $250 million checks, which ultimately we at this stage have not moved forward on because they're a little bit more stringent. There's a little bit of a different nuance taking institutional funds, but that same corporate deck can be utilized to family offices, and really they all network with each other. And so once you have one family office that you work with pretty heavily or significantly, they're going to refer you to their cousin's family office and then their neighbor's family office. And so you'll start getting, again, that referral source. And that's how you start seeing more family offices approaching you because they heard about you from so-and-so. Or sometimes what we'll do is we'll let them co-invest together as one fund and come in as, a $5 million check. And maybe it's 10 family offices writing a $500,000 check. And now they're just putting a toe in the water. They're seeing, and then once you prove out your ability, they'll come back and they'll reinvest at a higher clip. And it's nice to have those family offices because a lot of times they're not going to be cash on cash driven the way an individual investor is. They're going to be more IRR or equity multiple driven, which gives you a lot more wiggle room when you're underwriting a deal.
Nice. You mentioned created an investor brochure. Could you just quickly, say, what do you put in that? Just so somebody listening can think, hey, I should do that too.
Yeah. So I put everything you think a new investor would want to know when they're vetting you as a sponsor is what I would put in there. So this is not deal specific because you don't have a deal all the time. This is who you are, your bio, who's on your team, their bio. This is how you look at deals. I have case studies in there from 1 or 2 acquisitions that we've done. What were some of the highlights of it? What were the things that we did really well there? How have we looked at exiting deals? What is our track record? All of that is included in our investment brochure or company brochure.
Nice. No, definitely a good idea to have that on hand, and then you can add to it as you gain more experience, right? Yeah. A few final questions, Veena. We could talk about this stuff all day. So you're a wealth of information around this, just business and capital raising, and grateful. But I always like to ask operators, how do you prepare for a downturn?
Oh, yeah. So that's actually when we were talking about shifting asset classes, this is one of the ways we prepare for a downturn. We also have adjusted our underwriting. So as an example, the deal that we went into, the last deal in 2021 that we went into, we adjusted the T12, the NOI down by 3%, which do I think we're going to operate worse than the current operator? No, but our numbers still work even if we go down 3%. And then our underwriting also did not take into account the full premiums that I either think we're going to get because that's what everyone else is getting in the market, but more importantly, our nearest asset is getting way higher than those premiums. And so we've adjusted all of the expectations down. We've increased our vacancy assumptions. We have gone in with plenty of reserves. We've increased actually a big one for this year is increasing your CapEx allocation for renovations because of supply chain issues. So historically, we might have underwritten it at 6,000 or 8,000, and now we're underwriting it at 11,000 or 12,000 per unit. So those are differences we made in our underwriting. And then, we underpromise and overdeliver is the goal.
That's right. No doubt about it. What about a way that you've recently improved your business that we could apply to ours?
Oh gosh, like I said, I've done a lot of improvements and tweaking recently. So one of the ways I'm actually in process of doing this, and I think it actually is useful and will probably kind of tie into your lead gen question too. But I've started outsourcing my social media. So now because I hate, like I said, content is the bane of my existence. I hate it. I don't want to take pictures of what I do all day because I sit in front of a computer all day or I'm on the phone all day. So there's that. But I just hate creating content. So now I've started outsourcing that. So like my Instagram, I have somebody who puts together content so it all looks the same and can push it out the door. And I think that that's really going to help when it comes to even investors just vetting you. They want to see that you have a social media presence. They want to see that you're a real person. And so for me, I think outsourcing social media has been a huge process improvement for me.
Nice. No, great suggestion. And what about some daily habits that you are disciplined about that have helped you achieve success?
It depends on which day you're asking me, because if I'm mid-raise, everything goes out the window. But I have twin 2-year-olds. And so one of the things that I make a priority is between 5:30 and 7:30. Most days when I'm not mid-raise, 5:30 and 7:30, I shut down my computer. I leave my office. I leave whatever I'm doing so that I can eat dinner with the family, spend time with the family. It's how I kind of decompress and unwind. And then after I put them to bed, I go back to the computer and get back to work. So for me, family time is really important. I also read a lot during the day when I'm in between things. So even if it's for 5 or 10 minutes. And then I also have been, are you on Clubhouse yet, Whitney?
I'm not.
Okay, so it's actually been a wealth of knowledge because there's a lot of people that you get access to that you wouldn't normally have access to. And I turn it on kind of like the radio in the background. So instead of listening to like the music all day, I turn Clubhouse on. I go into these rooms that are like commercial real estate news. I was in a CRE room this morning, and there's actually a young lady who runs her family office now, and they're one of the largest office investors in all of New York. And she runs that room. And so like I log in and I listen to her speak and I listen to what she's doing and how she's looking at the market. And so I utilize those people as kind of a way to, steal their ideas and use them in my business to improve my business. And so I think that actually has been a big game changer. And Clubhouse hasn't been around that long, but it's definitely the social media form that I enjoy the most.
That's awesome. That's a great suggestion too. Any ways that we can be just constantly educating ourselves, right? And from people like that typically that person may not ever start a podcast, but they'll get on there and talk, about what they're doing. And so that's a great suggestion. Tell us how you like to give back.
Oh, yeah. So I do a lot of charitable work. I know this is something you and I have in common, actually. And so every time I close a deal, this is a tradition I started maybe like 4 or 5 years ago, but every time I close a deal, I actually choose a charitable cause. And then I do another round of fundraising after that. So I encourage anybody, investors too, but I encourage anybody, especially if you made money from the transaction, to make a donation to whatever cause that we're donating to. So we've done a lot in the past. We've planted like several thousand trees after one deal closed. After another one, we did a breast cancer fundraise. We've done ones for childhood pediatric cancers. We just pick a different organization. Water.org is another one we've done. RIP medical debt. So we just pick different organizations, just what's kind of top of mind or important to us for that season of life. And then we run a little mini fundraiser, if you will.
No, that's awesome.
Everybody. Yep.
That's a great idea. I love that. Love that thought. Yeah. Well, Veena, grateful for your time. You've been very generous with your time today and the things you've learned, things you're doing right now in your business and how you've improved. And I mean, going through the capital raising, but even shifting your asset classes as well and why, and even the amenities, the importance of those things and how you handle your lead gen, your offering, your wait list. I mean, all these things that even hiring your assistant or admin person, that's so important, even to adjusting your underwriting through a potential downturn. So very grateful for your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, so you can come to my website. It's vivefunds.com. And actually, I think you can download my investor brochure there. If you go, there should be a pop-up that you can download it so you can see what's in it. And, you don't have to reinvent the wheel. So, or you can find me on social media, Veena Jetti, VeenaJetti. I'm on all of them, Twitter, Facebook, Instagram,
Clubhouse.
Everywhere. Yes, everywhere. So
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.